Assalamualaikum warahmatullahi wabarakatuh. This lesson is on Chapter 5, Emerging Business Ethics Issues. So the learning objectives of this lecture is, by the end of this chapter, you should be able to define ethical issues in the context of organizational ethics, examine ethical issues as they relate to the basic values of honesty, fairness, and integrity, delineate misuse of company resources, abusive and intimidating behavior, lying, conflicts of interest, bribery, corporate intelligence, discrimination, sexual harassment, fraud, consumer fraud, financial misconduct, and insider trading. And finally, examine the challenge of determining an ethical issue in business. Okay, first of all, we would like to see about recognizing an ethical issue or ethical awareness. People make ethical decisions when they find an ethical component in a particular issue or situation. Failure to acknowledge or be aware of ethical issues is hazardous to an organization. In a dilemma, all of the alternatives have negative consequences, so the less harmful choice is made. Okay, so a dilemma, so ethical issues is one term, and the other term is called ethical dilemma. Okay, so ethical issues is when an organizations face a problem, an incident, or an opportunity that requires them to make a decision, and that decision is based on whether an action is wrong or right, ethical or non-ethical. Okay, so that is ethical issue. Whereas ethical dilemma is when an organization faces a problem, an incident, or an opportunity that they have to make a decision um, by evaluating whether the issue is or the incident is where the two options are, which one is less ethical or than the other. So in ethical dilemma, both options probably have negative consequences, but they need to choose which one has the less negative consequences. So in ethical dilemma, the choice is not as clear, but in ethical issues, usually it is clearer to see which action is right and which one is wrong in terms of dilemma. Okay. Collusion is a secret agreement between two or more parties for a fraudulent, illegal, and deceitful purpose. Deceitful purpose suggests trickery, misrepresentation, or a strategy designed to lead others to believe something less than the whole truth. So these are some of the important terms. Collusion. Okay, collusion is when several parties, several people, they discuss, and they agree with each other to do something illegal, to do something unethical. Okay, so they collude. Okay, collusion. And then deceitful purpose is using trickery, misrepresentation to lead others into believing something that is not the whole truth, or something that is not the truth. Okay, so making something so that people trust or believe something that is not the truth. Okay, next is foundational values for identifying ethical issues. Okay, so there are these are the most basic values that organizations should have in identifying ethical issues. So when organizations face ethical issues, then these are the foundational values that they need to bring in when they make decisions. First is integrity. Okay, so integrity is one of the most important elements of virtue. It refers to being whole, sound, or in an impaired condition. That is one way of looking at it. implies a balanced organization that not only makes ethical financial decision, but also is ethical in the more subjective aspect of its corporate culture. So being integrity refers to being as a whole in all aspects of the organization, always making the right decision, upholding to certain principles. So at a minimum, businesses are expected to follow laws and regulations. So the minimum level of integrity is organizations should follow all the laws and regulations. Um, Business relations should also be grounded in integrity. Second concept or second foundational values for ethical issue is honesty. Okay, so honesty refers to truthfulness or trustworthiness. Okay, telling something that is right. Okay, uh, not withholding any secret. No, not exactly, but telling the truth basically. Okay, um, truthfulness or trustworthiness. Issues related to honesty arise because business is sometimes regarded as a game governed by its own rules rather than those of society. Okay, so um, when businesses compete with each other, but when they compete among each other and the manner that they compete is like similar to a game. When you are in a game, sometimes you don't be as truthful as you should be in real life, okay, in a game or even in a war. Okay, in war there will be some deceit, there will be some some withholding from the truth, because we need to have strategies to beat our opponent. Okay, so if businesses consider themselves in an industry, in a market, like in a war on or a game, then there will be issue that organizations not following the honesty value as much as they should have. Okay. Many argue that people are not economically self-sufficient. They cannot withdraw from the relationships of business. Business must make clear what rules apply. Rules appropriate to the involuntary nature of its many participants must be developed. Dishonesty is a lack of absence of integrity, incomplete disclosure, or an unwillingness to tell the truth. Okay, so dishonesty is just the opposite of honesty, where an organization is not telling the truth, unwilling to tell the truth. The third foundational value for identifying ethical issue is fairness. Okay, so fairness is the quality of being just, equitable, and impartial, and it overlaps with the concepts of justice, equity, and equality. Okay, so fairness be treating everyone the same way. Okay, that is um, treating everyone in an equitable way. Okay, according to their condition. um, yeah, so fairness is not necessarily treating everyone the same way, um, but in an equitable way. Okay, um, so for example, um, if a country taxes its its citizens, those in the lower income bracket, they are not taxed, or they are given 0% tax. But those who are in the higher income bracket is taxed 20%. So uh, if we think that this is unfair, because why is the rich one taxed 10%, why is the poor ones not taxed at all? So it seems unfair. But that is not the concept of fairness, but its concept of fairness is about equitable. Okay, So three fundamental elements that motivate people to be fair include equality. Okay, so uh, one aspect, it is equality, which is how we understand, we fundamentally understand fairness. We're giving everyone the same amount, for example. Okay, so being fair is even distribution of benefits and resources. If we have 10 items, we have 5 friends, then we give 2 items per friend. Okay, so that is equality. And then reciprocity. Okay, reciprocity is an exchange of giving and receiving in social relationship. So being fair is about reciprocity, where, for example, if I um, give $10 worth of money, and then the other party, I give $10 worth of money to someone, and that person uh, provides me with some service that we consider to be equal to the value of $10. So I'm giving $10, and the other person is giving me back a service that is equivalent to $10. So that is reciprocity. Okay, so the interchange of giving and receiving. And then optimization. Okay, so optimization is the trade-off between equity and efficiency. Okay, so on one hand, for example, if we employ some people to work for us, okay, probably we want to employ somebody to become an accountant. Okay, so if we consider equality, everyone should get the equal chance. So we may be equal. So if a person who is an accounting graduate, a person who has 10 years experience of being an accountant, and someone who just left high school without any university background, if we are to be equal, then we should give all these three people the same chance of becoming an accountant in our organization. But we know that if we do that, we will not be effective, because if we take the one who is just a high school graduate, definitely they won't be able to do the work. Okay, so optimization is being making a trade-off between equity, between equality. So equality in terms of giving the same chance to these three people to become an accountant, but we didn't do a trade-off. We also take into account the efficiency. Okay, so what is the most efficient way of performing the work of the task of an accountant? What is the most efficient way? Which is to pay somebody who has some background or education level in accounting to do the work. Otherwise, there won't be efficiency. We pay salary, but we will not get any benefit out of it. Okay, so there is optimization is the trade-off. On one hand, we have equality because we are not discriminating between the candidates based on race, based on gender, but uh, we do screen our candidates based on their educational background, their experience. So having a trade-off between equality and maximum productivity by having those who have a background in accounting. So that's optimization. So fairness is having these three elements: equality, reciprocity, and optimization.